Welcome to the Deep Dive. We're here to take the sources you give us, articles, research, maybe even earnings call transcripts, and really unpack the key insights.
And today, well, we're doing exactly that. We're diving into the first quarter 2025 earnings call transcript from KULR Technology Group.
Yeah, we've got the transcript right here, and our job is to pull out the important stuff, the numbers, the strategy, what management's actually saying, because this company seems to be involved in quite a mix of things.
It really is a fascinating mix. You've got batteries, robotics, and Bitcoin. We'll stick strictly to what was said on the call, drawing everything directly from that transcript.
Okay, let's jump straight in. Financial snapshot first, the Q1 2025 numbers you need to know. Top line revenue, $2.4 million.
Now, that might not sound huge on its own, but it's up 40% compared to Q1 of 2024, so decent growth there.
And they also hit a new record for trailing 12-month revenue. That's the third quarter in a row it's increased.
Right. And if you break that revenue down, product revenue was the big driver, up a pretty impressive 89% year over year.
Service revenue, on the other hand, was down slightly, about 8%.
And interestingly, this was the first quarter they reported specific revenue from Bitcoin mining. Came in at $250,000.
That's new, definitely. Okay. And it looks like they also boosted revenue per customer. Overall, that metric was up about 64%.
Yeah, and product revenue per customer saw a huge leap, up 195%. Service revenue per customer also ticked up about 7%.
Okay, so revenue picture looks positive overall. What about margins?
Gross margin for Q1 was 8%. Management did say this was down, and they pointed mainly to some unexpected extra labor hours on technical projects.
Got it. And operating expenses.
Those were up too compared to last year. Increases in things like marketing, insurance, non-cash stock compensation, and also a one-time non-cash adjustment for an asset.
All right, so that covers the income statement side. But the balance sheet, well, that's where things get really interesting, wouldn't you say?
Definitely. They ended the quarter with a solid $24 million in cash, plus about $2.9 million in current accounts receivable.
But the headline number has to be the Bitcoin.
Absolutely. At the end of Q1, March 31st, they held 670 Bitcoin. Management valued that at over $55 million at the time.
And they gave an even fresher update during the call itself, right?
They did. As of May 10th, they were up to 716 Bitcoin and valued those at around $74 million based on the price then.
Wow. So $74 million in Bitcoin compared to, what, $2.4 million in quarterly revenue? That's a very significant treasury position.
It is, and management really hammered the point that the company has no material financial debts. They wanted to make it clear they feel well capitalized and are basically debt-free in the traditional sense.
Okay, that's important context. And there was that $9.7 million non-operating expense item. What was that about?
Right, they clarified that. It's not a realized loss. It's purely a non-cash mark-to-market accounting adjustment. It reflects a change in Bitcoin's value compared to the end of 2024.
So it just shows the price went down between those two dates on paper. They didn't actually sell anything at a loss.
Exactly. And they even pointed out that with Bitcoin over $103,000 when they were prepping their remarks, that specific paper loss would actually flip into a gain. It's just accounting rules reflecting volatility.
Understood. Okay, so with those financials laid out, let's talk strategy. The CEO called 2025 a transformational year and introduced this Bitcoin first idea.
Yes, he spent some time defining what Bitcoin first means for them. It's not just holding it as an asset on the side, it's treating Bitcoin as a core pillar, central to their identity and strategy.
He connected it to digital transformation trends.
He did. He framed AI as driving the intelligence transformation and Bitcoin as transforming capital and energy, sort of two sides of the same coin for the future, in their view.
And this whole strategy apparently started with a poll on X.
Yeah, back in December 2024. So they ran a survey, 2/3 voted yes on adopting a Bitcoin treasury strategy, and then boom, December 26th, they made their first big buy, $21 million worth.
Now they're ranked pretty high among public companies holding Bitcoin.
Number 30 globally, according to the data they cited from Hodo 15 Capital.
He used a pretty strong analogy to comparing buying Bitcoin to, what was it?
Buying a digital monopoly business at basically 1 times its annual revenue. But that revenue, the value is growing 60% a year. That's how he framed the investment case.
And so their capital raising activities are now geared towards this.
Explicitly, he said capital markets activity is designed to turbocharge the Bitcoin treasury strategy. The goal is maximum Bitcoin accumulation.
And mining fits into that too.
Yes. They see strategic Bitcoin mining as another way to get more BTC, potentially at a better cost basis and maybe with less shareholder dilution than just buying it. They expect mining to boost their overall Bitcoin yield.
You talk about the volatility. I mean, Bitcoin isn't exactly stable.
They addressed it head on, actually quoted Michael Saylor, volatility is vitality, especially now with AI accelerating things. The message was basically, this takes courage, it's different, but we believe in it.
Okay, so a very strong commitment to Bitcoin as the core capital strategy, but they still have operating businesses, right? Let's talk batteries. Sounds like investments in their KULR platform are paying off.
Yeah, management described it as a pivotal phase. They talked about faster development cycles, scaling up production, better battery capacity, and more technical validation from customers.
A big part of that seems to be the facility expansion in Texas.
Absolutely. They doubled their space in Webster, Texas to around 31,000 square feet. And that directly translates to doubling their battery production capacity.
And they're building these batteries faster now.
Much faster, according to them. They highlighted development timelines shrinking from potentially years down to as little as 6 weeks in some cases. That's thanks to integrating advanced manufacturing with their in-house design.
6 weeks is impressive. They gave an example, didn't they?
Astrophorge SpaceX mission, yeah. Delivering a custom certified battery for an asteroid mining mission in just 6 weeks. They use that to show their team is ready, and the platform is mature enough for really demanding applications.
And that speed helps their business model.
Definitely. Being able to respond quickly lets them target niche or new markets efficiently without massive upfront capital needs for each project. They also offer design and testing services.
Which helps customers, but KULR keeps the IP.
Exactly. Customers get cost-effective development. KULR retains full intellectual property ownership.
And they landed that big grant from the Texas Space Commission.
Right, $6.7 million. Specifically to advance next-gen space batteries, including tech for extreme cold, like minus 60 degrees Celsius. They called it rocketized tech.
Ties into Texas wanting to be a space hub.
Yeah, and securing local supply chains for this kind of critical space hardware.
So their positioning is basically fast turnaround, high-spec batteries for space and defense at good prices.
That's the summary they gave. They also mentioned a blockchain initiative for the supply chain.
NFTs for batteries. How does that work?
The idea is minting battery metadata test results, specs, history onto an NFT. Then they transfer that NFT to the customer with the battery. Provides a secure, verifiable record. They mentioned using it for a specific NASA-screened battery.
Interesting. Did they say anything about, like, car batteries? EVs?
They did in the Q&A. They're intentionally staying away from providing batteries directly for the EV market, cited tough, thin margins.
But they do testing for car companies.
Yes. They provide testing services to automotive OEMs, just not selling the batteries themselves into that mass market, and also no focus right now on consumer stuff like power banks or phone chargers.
Okay, clear focus there. Let's shift gears to the other big tech piece, AI and robotics. They see a huge market.
Massive, multi-trillion-dollar potential for physical AI and robotics overall. And they specifically called out wearable robotics, predicting a $42 billion market by 2033.
And their entry point is exoskeletons.
Exactly. They see an immediate opportunity there, especially with labor shortages and the physical demands in industries like manufacturing, construction, logistics.
They highlighted a specific product.
The Apogee suit from a company called German Bionics, described as the world's most powerful exoskeleton, designed to help workers who do a lot of heavy or repetitive bending and lifting.
What kind of tech is in it?
It's got sensors, connects to the cloud via cellular, and provides data to an enterprise dashboard so companies can track safety and ergonomics.
And the main problem it solves is back pain.
Primarily, yeah. Lower back pain, which they noted is the #1 musculoskeletal disorder.
How do companies get these? Buy or lease?
Based on the German Bionics model in Europe, it's about a 50-50 split. Companies can buy them for around €20,000 or lease them for roughly €20 a day. They expect a similar model could work in the U.S. with aggressive pricing.
And who are the target users in the U.S.?
Big numbers. Manufacturing 12 million workers, construction 8 million, warehousing nearly 2 million. Plus healthcare nurses, home health aides, millions of potential users there too.
And they link this to the labor shortage problem.
Directly. Mentioned over 600,000 unfilled manufacturing jobs currently, and a projection of a 2.1 million worker shortfall by 2030, potentially costing the economy $1 trillion. The exoskeletons are positioned as a way to help retain workers and make jobs more manageable.
So for the worker, it means less fatigue, fewer injuries.
That's the pitch. less fatigue, fewer injuries, potentially more productivity, physical assistance with lifting, lowering, even walking.
They gave a healthcare example too, right?
Yes, about use in German hospitals helping nurses move patients, reducing back strain. And a sort of fun fact, nurses apparently asked for handles on the suit, which made patients more comfortable asking for help, potentially improving recovery.
What about the AI part?
Well, the suit collects a lot of data from its sensors. Management said they're just scratching the surface with AI, but potential uses could be recommending breaks if it detects fatigue risk or suggesting stretches.
But it doesn't eliminate the physical stress entirely.
No, they were clear on that. It reduces stress, but workers still need proper care and rest. The device gets smarter over time as it learns usage patterns, though.
Did they have any customer results to share?
A compelling one from a paper cutting business. In a 2-hour session, the exoskeleton compensated for over 10,000 pounds of lift weight for the worker.
10,000 pounds.
Yeah, they put it in perspective equivalent to the weight of an average elephant. So helping with like 4 elephants worth of weight a day, 20 a week. Pretty striking image.
And how does this opportunity compare to the battery business in their view?
In the Q&A, management said the short-term profit potential for exoskeletons is equally exciting as the space battery development, so they see both as significant near-term drivers.
Okay. Any other key points from the Q&A section we should mention?
A few quick ones. They're still pursuing that UPS deal for their safe case product for large batteries.
What about Emprius?
That's a technology design partnership. They're collaborating on high-energy batteries for specific markets like space, defense, drones, robotics, and industrial uses.
And the SpaceX mission, are they paying for that ride?
Yes, they confirmed KULR is paying SpaceX to launch their CubeSat and battery. Expected in 2027, and it should include that ultra-low temp battery tech they're developing with the Texas grant money.
What's happening with their California facility?
They're consolidating all the activity there. Thermal products, battery screening, other stuff is being moved to the expanded Texas facility. That transition should happen between now and the end of the year.
And did investors ask about sales now that the Texas plant is ready?
They did. Management basically said the expanded facility is why they can serve customers faster now, like that 6-week Astrophorge example. They expect more deals to move through the pipeline quicker because of this increased capacity.
And finally, that revenue doubling prediction.
Yeah.
Are they sticking with it?
Yes. They were asked directly and reaffirmed their expectation, first mentioned on the previous call, that revenue should at least double by the end of 2025 compared to the prior year. They seemed confident based on Q1 and the strategic progress.
So there you have it, a really diverse picture from KULR Technology Group based on this earnings call. You've got this major Bitcoin treasury play layered on top of specialized tech in batteries and robotics.
It's definitely a unique strategy, fully embracing Bitcoin as digital capital, while simultaneously pushing forward with very tangible physical hardware for space, defense, and industrial workers. Management clearly sees these threads weaving together.
It really leaves you with questions, though. How does a company calling itself Bitcoin first manage and fund growth in these very traditional, capital-intensive industrial sectors?
That's the core puzzle, isn't it? How do you balance the volatility of your main treasury asset with the long-term R&D and production needs of, say, space batteries or exoskeletons? What are the synergies? What are the potential conflicts? It's a fascinating case study in strategic diversification.
Now, before we wrap up, we absolutely have to state, everything we've discussed is purely drawn from the earnings call transcript provided. It's for informational purposes only.
That's right. This is definitely not financial advice. Investing carries risks, and you should always do your own thorough research and consult with a qualified professional before making any investment decisions.
Seriously, making decisions based just on a discussion like this wouldn't be prudent. The combination of strategies here is unusual, blending digital asset speculation with industrial tech execution.
Evaluating a company like this requires looking at both the macro Bitcoin thesis they've adopted and the micro execution within their battery and robotics divisions. How do those two interact? How do you weight them? It's complex and, frankly, quite unique in the public markets right now.
Absolutely. A lot for you, the listener, to think about if you're following this company or sector. That brings us to the end of this deep dive into the KULR Technology Group Q1 2025 earnings call.
We hope walking through the details from the transcript helped you get a clearer understanding of their recent performance and strategic direction as presented by management.
Thanks for joining us for this deep dive. Until next time.